Good day and welcome to the Kellton Tech Solution Limited's Q2 and FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. I would like to thank you all for participating in the company's earnings call for the second quarter of the financial year 2024. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature, and such forward-looking statements are subject to the risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintam, Chairman and Whole-Time Director, and Mr. Karanjit Singh, Chief Executive Officer, India. I now hand the conference over to Mr. Niranjan Chintam, Chairman and Whole-Time Director. Thank you, and over to you, sir.
Thank you. I'm sorry. Just I traveled and then I'm having some throat issues. Apologize for that in case if I'm coughing or, I have to take a water break. So that's it. Thank you, everyone, for joining the call. Again, apologies for having this call during India-New Zealand semi-final. I know we timed it perfectly where, we got through the innings break. So with that, let me start off with the financial numbers for Kellton Tech for 6 months of financial year 2024. The total revenues that we have achieved is 490 crores, which is about a 10% year-on-year increase. And the company has reported EBITDA of about 54 crores, which is about 6.4% year-on-year growth. And EBITDA in 6 months is about 11%. The net profit stood at 31.9 crores. The PAT margin is about 6.5%. The EPS for the first 6 months has been 3.32 rupees. That's the 6-month review. The quarterly revenue, the Q2 quarter numbers are 241 crores, which is a 5.8% year-on-year growth. The company has reported EBITDA of about 26.8 crores, which is about 3.1% growth year-on-year. The EBITDA margin is around 11%. The net profit for this quarter came down to 16.5 crores, which is 7.1% growth over quarter-on-quarter. The PAT margin is about 6.8%. The EPS for this quarter stood at 1.78 rupees. Now, coming to operational highlights, I'll let Karanjit explain in detail the number of each of these clients, but we have won about 8 new clients for this quarter. A little bit more on the operational highlights. Kellton has notified to the exchange, we have won the Karnataka State Government HRMS contract, which is a transformation of their existing manual way of doing things to digital. We are doing things, we're going to cater towards 6 lakh state government employees, which is about 600,000, which is a significant win for us because this is probably the largest deployment that is going to be in the country, a single deployment. Kellton has also achieved a milestone of achieving the 2023 Economic Times Premier Tech Company Brand Award. Also, Kellton has forayed into the Singapore markets. We've been making some baby steps. Now we are making some aggressive investments there and started acquiring new customers in the digital transformation space. With that, Karanjit, can you please briefly talk about the client wins that we had last quarter?
Sure. Thank you, Niranjan, and hello, everyone. So as Niranjan said, we have acquired 8 clients during this quarter, and these are spread across various industries, but all of them are very significant transformative digital efforts. We have basically, for the first time, we have signed up 2 initiatives on the India stack. is the latest initiative by on the India stack, building on from Aadhaar and onwards. And we are basically going to help on the on the supplier onboarding journey for one of these initiatives, as well as the whole QA automation. Similarly, on the generative AI, while there is a lot of talk of generative AI, we can proudly state that we actually have almost 8 to 10 projects, real projects working. One of them that I'm mentioning here is where we are helping. We are helping a company which is a startup which is trying to build a SME platform, so which will help you have virtual SMEs all the way to addressing RFPs. It's a very they have a very robust thought and a roadmap for themselves. So we just began that thing. One of the things that we'll do is it will take your where the AI part comes in is they are going to take an SME and capture all his knowledge and basically create a DigiDouble for him, so that their clients can interact with the DigiDouble and they're always available and they can scale. We have engaged with a very large retail chain. It's actually it's a company which has multiple retail stores in different categories, pharma, sports, things like that. And there we are engaged with them on the data side. So we have begun that particular engagement. We have with another company we are helping on the this is a SAP initiative on the enterprise side, where we are helping with what's called SLO, which is essentially these are large-scale reconfiguration of your existing SAP implementations, because you want to reconfigure the way that the whole implementation is, because you may have had a spin-off or you may have a merger. We have also signed up with a couple of other customers in the US where we are helping them build. There's one product company where we are going to do all the product engineering. They were not happy with their present vendor. It was almost a hot swap with a release expectation within the end of that month. We took over that. This is a pretty significant piece of work, and we took on that, and we are trying to put order into that release process. We did the first release, and now we continue to work with them on multiple initiatives. And there are a couple of others that we have signed up in manufacturing. There is a large media house in India. We have worked with Z in the past. We signed up with another media house to develop their content management system, which is again a very, very large project that we took on. So yeah, these briefly should give you a sense of the kind of engagements in terms of their transformative effects in the digital space. Thank you. Niranjan, over to you.
Thank you, Moderator, can you open up for questions?
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Shahnawaz Shahnawaz is an individual investor. Please go ahead.
Hi, sir. Good evening, sir.
Yes. How are you, Shahnawaz?
I'm fine, sir.
Good to talk to you again. Go ahead, Shahnawaz.
Yes, sir. So, sir, first of all, the number what we talked in May, actually, then there was like commitment. We are going to grow exponentially, along with EBITDA of good EBITDA. But this quarter is a very unfortunate number. So I mean, even revenue has dropped down from Q1, as well as the EBITDA is similar, and if you look at the balance sheet, which has a lot of outstanding, means receivable is very high. So what EBITDA we are earning, again, it is almost 6 months. That also almost 5 to 6% will go as an interest cost because of the high receivable. Third question, third issue, like you have said, Karnataka, you have won an order. Sir, can you define the value of the order? What is the size of the order? Because if it is a big, so at least the market should know what is the value of the order. In how you are seeing the business, because I just want to see the comparison in AI. When we search, there are 2-3 companies are there, and they are able to give 24-35% EBITDA. So there is a peer. I should not compare, but there is a peer. Of course, Saxoft is there. That company has performed 4-5 times, and because of their, if you look at the revenue, manpower size is also less, but they are far better than even cash flow or in terms of. In fact, they are giving dividend also. So, what is your say and how you see the future, sir? When it's been, always we talk, and sometimes back you said 300 million. We came to 200 million, but 200 million by 2025. But I don't see even to 2025, 200 million is possible. So, can you give some light? 4-5 questions I have asked in one go. So, can you brief us? Can you
multiple questions? Let me try to answer each of them, Shanavas. And can you mute yourself, Shanavas? There's a lot of background noise there.
Yeah, okay.
Thank you. Shanavas, thank you, and appreciate you asking the questions. So let me answer each one of them. Karanjit, correct me if I'm wrong. Can you mute yourself, Shanavas, if you don't mind? Okay, thank you. So, Karanjit, correct me if I'm wrong, on the Karnataka government order side, it's about 40 crores. Karanjit, am I right in the number?
Yes, it's about 45 crores. 45 crores.
Yes, 45 crores. 45 crores is it. But, there is a lag between when we can raise an invoice because it's a milestone-based project. So there's almost a 10-month lag before the first invoice goes to Karnataka government. So that's the reason why some of the things that you're seeing, right? It is not accrued. Unless we meet the milestone, we cannot accrue the revenue into our books. That's the reason why. Some of this revenue that, you probably have seen, whereas the cost has incurred now versus the revenue is coming in a little bit later. Also, you asked the question about the revenue. Why is the revenue a little bit lower than last quarter? It's also due to deferment. Some of the orders that we have won have been deferred by a quarter in most cases, and some of them are by 2 quarters. This is just because of the headwinds that the industry is facing in the U.S. Then it's no reflection of what we're doing. It's a reflection of how all other companies are facing headwinds there. Their budgets, they've been pushed back. So we will be starting a lot of these contracts, starting probably the first quarter of calendar year 2024. So all these deferments that are going on, we continue to hear, yes, we are the finalists, we have won it, but the start date is getting pushed back, sometimes by a few months, sometimes by a few quarters. That's the reason why you see the revenue dip there. To answer your question on the AI-based company, you're comparing us with somebody else. I'm not sure which company, but again, let's not name names here for the discussion's sake. I understand that your question of, yes, our margins are lower compared to others because, we are delivering on-site. Many of our projects, especially in the U.S. and some in Europe, we're delivering on-site, whereas, some of these companies are able to deliver by bringing back the contracts to India and delivering from India. We have been experimenting with that. Some of them we are successful, some of them we are not. Because the customer insisting that, they need to see the faces, they need to sit there and do the work. Because of that, our margins are lower. So that model is slightly different. We always have been started with that model where we have many on-site personnel delivering projects in country versus offshoring it to India. There is a significant difference between them and us. I understand our model is different from theirs. That's the reason why you see the margin differences. Coming to the revenue numbers you asked about it. We are confident that we're going to achieve the 200 million target that we have done. Right now, we are in this planning exercise for 2024 and 2024 calendar year. That's the reason why all of our people have been traveling around and talking about the management. Srini He's on a plane as we speak. That's the reason why he couldn't get on the call. But 2024 is looking much better. We're hoping that the headwinds that we're facing are going to go away. There are many projects in the pipeline that we have, and the pipeline looks very solid. And 2024 will be much better than 2023. Again, I'm talking about calendar year at this point because we do calendar year planning, whereas the reporting comes to a financial year reporting. That's the reason why you see the difference. Okay.
And sir, just to interrupt. So when we is likely to see that, because as you said, you are doing a lot of projects on site, right? On site. So, and I assume the trend is continuing. So whether the pressure on margin will continue like this, or there is a mitigation plan you have, which is maybe implemented or 75% is done, and you are planning, because the overall you see the bottom line, everybody loves the bottom line, and even your cash flow I was seeing is very poor, sir, to be very blunt. So that there also in 6 months only hardly operating cash is 11 crores. I mean, such a big company. So how you are seeing the improvement in EBIT margin, sir? Margin EBITDA, because I have seen you have done some pledging.
Okay.
So pledging.
Right. The share pledge was more to do towards operating money we took from the bank. It's nothing to do with a reflection of our personal needs. It's more for the company. The requirement, I think, we did talk about responsible time, Shanawaz, where I said, hey, we keep asking banks, keep asking to pledge, property, and we are not a Tata Birla. We don't have property. We are first-time entrepreneurs, and, hence, the only asset that we have that is not pledged is the shares. And the banks are demanding more and more whenever we ask for a small amount of money for operating business, right? And, we had to pledge our shares to get that operating requirement. Especially, let's look at the Karnataka government that we're talking about, right? The first milestone billing that we can raise is 10 months from now. Whereas every month, there is over 1 crore of employee costs that are incoming. In addition to, we have other costs like, infrastructure costs, the office setup, all that stuff, right? If we're talking pure employee costs, it's over 1 crore. So we are almost like, by the time we raise a bill, we're about 15 crores into the project. So these kinds of things require investment upfront, whereas the revenue comes later. So that's the reason why you see some of this pressure on the cash flow requirements and all that stuff. Okay? So I hope I answered your question, sir.
Yeah, I got it, sir.
Okay.
So
Thank
I
you.
assume that another 10 months the pressure in the margin will be there, or how you are seeing the
problem, Shanawaz, you're just looking at only one contract, right? We have many contracts like that. I'll just give an example, since that is something that is a discussion.
Overall, like where the market can get some confidence, yes, Kellton is going to bring EBITDA on table, sir. Because unfortunately we are talking, sir.
The execution is also happening simultaneously. So when we have this large milestone project, Shanawaz, we would have these cash flow pressures that we are facing. Because I cannot accrue the revenue, but I have to expense the cost today. Okay, that's where the challenge is coming. Okay.
How is the future, sir? I mean, and the bottom.
2024 is looking much better than, like I said, calendar year 2024 is looking much better than the calendar year 2023.
Operator request has been initiated. If you'd like to cancel this request, please press *0 again.
Did I answer your question?
Yeah. Okay. Thank you, sir. Only out. Okay.
Oh, thank you.
Thank you.
Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. Participants who wish to ask questions may press star and 1 at this time.
Looks like the innings break has ended, huh? Game has started again?
So we do have one questioner who has joined the queue.
Please go ahead. Yeah.
The next question is from the line of Muhammad Afroz Namakwala, an individual investor. Please go ahead.
Hello.
Hey, Afroz. How are you?
I'm fine, sir. Happy Diwali to your team and everybody from my side. Sir, I would like to know about 2 quarters previously that profit was a bit low. So the reason was that we have done overcosting, and it was said that in next coming quarter you won't be looking this overcosting effects in our balance, this P&L. So could you please clarify and put light why this quarter is also our profit is flat?
Okay. So, of course, I think you're referring to my comments wherein I said the employee costs have gone up because of the yearly appraisal cycle that we have done. Okay. Whereas, our clients have not increased the bill rate. Bill rate, yes. So the bill rate, the way it happens is at the time of renewals is when the negotiations happen. Typically, we sign 1-year contracts where the rates are locked in. So at the cycle of the renewal cycle, every customer is different renewal cycle. Mm-hmm. So we negotiate an increase in the bill rate. So that some of them have come in place, some of them are going to come in. It's a process that goes on over a period of the next year is when the bill rates start going up. Some of them, are facing headwinds. I'm talking about the companies themselves are facing headwinds. And they ask for, hey, freeze it or, say, okay, reduce it to some extent, some of the customers. So we have faced a combination of those two. So it's a balance this out over a period of a year. At this point, I don't have a date where I can say, okay, everything is baked in now. Now we are, back to normal. I don't have that date because it's a continuous evolution process that we are doing. And yes, companies are facing headwinds in the Western world. So we are seeing that impact too when it comes to some of the raises that we are looking at from a bill rate point of view. But some customers, new age customers, we are able to ask demand for premium and we're getting that. Some of these AI-related ones that currently was talking about earlier, where you can get a significant better margin than the old technology-wise that we do provide services on. So I think we are making progress, but we are not there yet. It's a continuous process.
And one more question I would like to ask you, sir, regarding our debts. The data, the sales we do when we have to collect our money back now. Yes. Our data days are around 2 quarters, that is around 180 days, which is dragging our profit because of the interest we are paying, and our funds are stuck with those data. Even our data our clients are, I think, this Adani and very big companies. So how it could be that we should get our this money earlier or fast cycle money? Okay,
so let me answer that question approach. We are a small company when it comes to this Adani of the world, right? We pick Adani and pick Adani. Adani has been very prompt in payments. Let me make it clear to you. Very prompt in payments of their cycles. When the resident was getting paid. Unfortunately, because of whatever happened, right? There was some pressure on them, and that pressure we also got transferred that pressure for us. Right? Now we are back to normal with Adani. But we have larger customers like UPS, IBM of the world, right? Where we get paid after 9 months. So those things that we cannot negotiate with them. We're too small a player for them. They say, hey, you either take it or you might have somebody else, right? What do we do then? We have no choice but to take care of these kinds of things, and we agree to that. So yes, what we are seeing is the database went up. I agree with you. That is because a reflection of what's happening in the industry or what the pressures that the companies are facing. There is I'm just making numbers up just for discussion. Okay? Where we used to get in 30 days, now became 45 days to 60 days. So those delays are happening, which is because of their customers itself, they're facing their own cash flow issues. So that is getting transferred to us. But, overall, these have been long-term customers of us. It's creditworthy-wise, they're great. It's just that, because of their facing pressure, we're also facing pressure. That's the only reason why this data is gone up.
Okay. Thank you very much, sir.
Thank you,
Good luck for your team. Okay, thank you, sir.
Thank you.
Thank you.
Participants, you may press star and 1 to ask a question. We have the next question from the line of Shanawaz, an individual investor. Please go ahead.
Sorry, sir. One question was, what is the order backlog we have, sir? Just I forget to ask.
So we have about 8 months worth of backlog. So if you look at the revenue that we have quarter, right, we have over 2.5 quarters worth of revenue is what we have. But, in some cases, right, some of the contracts varies, but today we have about 8 months worth of backlog.
And is there any write-off in the outstanding? In the current asset?
No. So there will be very small write-off if you're going to do anything, right? It's very small write-off. It's probably, I would say I'm just making stuff up here, right? Probably less than 1% is what we write off. I think last year was probably less than that, but this year maybe 1%. Right?
1%. Because the outstanding is huge, so sometimes customer put LD or...
It's just that's the nature of the business that we are in, China, that I was talking earlier, right? That's the nature of the business we are in. Some of these are milestones, some of these are, payments that get, we do accrue some side revenue, and those accruals, get paid up in the next month cycle. We're going to invoice, then we get the cycle of 30 to 60 days to 90 days payment cycle. So we end up pretty much almost like, 5 to 6 months before we get realizing the cash. That's the nature of the business.
Thank you, sir. But I hope our queue should increase, actually. Queue has reduced in the last 2 quarters. So, all the best.
Okay. Thank you. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Participants who wish to ask questions may press star and 1. We have the next question from the line of Rajesh Mundra, an individual investor. Please go ahead.
Hello.
Hey, Rajesh.
Even after implementing one Kellton, why there is no much significant increase in revenue of company in 6 months?
So you're saying we completed one Kellton initiative, why is there no increase in revenue? That's the question, correct? So the answer to the question is that we just finished it, like I said earlier, right? So we finished that, we just did a brand refresh recently. So there's a cost because of the brand refresh. It's like right now our brand is looking a little bit refreshed compared to what it was old and dated. We did that exercise, that is completed also. And, we have made some very high-profile hires in the last quarter. There are a couple of senior persons that we hired. One is a practice head that we hired in the U.S. Then we recently hired in North America salesperson head. So these costs are all coming into play. We are increasing our, I guess probably the overhead at this point with the anticipation of increased revenue in calendar year 2024. Hence the reason why, these costs are loaded in. You'll start seeing revenue. Already the practice head that we have hired has his cost has already been recovered by the sales that he has provided. So but the contracts that we have won because of him. So those are some of the things that are getting baked in, right? So these are all the stuff that is a process that is going on. It's not a upfront. We won't get it, but over a period of the next 1 year, you'll start seeing significant. We start seeing margins as well as increased revenues.
Sir, another question.
Thank you, Rajesh. Go ahead, Rajesh. Rajesh, go ahead.
Hello.
Yes?
How is economy in USA, whether it is recovering? Because our revenue is dependent on USA.
Yes. So the customers that we are talking to, are differing new starts by quarter. Some of them a few months, some of them 6 months. They have seen various different things. Everybody's waiting and watching, right? What is going to happen with the inflation? Inflation has come down. I think you've seen that last numbers that came about. It's about 3.2% this summer. what they're predicting was 3.7. So there are improvements that are happening that side, but from a macroeconomic situation, it's still not out of the woods yet. We will see how this quarter is almost, from a cyclical point of view, our bill rates, revenue numbers are not that great for this quarter because of the holiday season. The Thanksgiving has already started. I'm in U.S. today. We're doing some planning exercise around this part time of the year. We do planning. So I'm here in the U.S. for that. So we see that, slowdown has happened. The slowdown is going to be affected till probably mid of January, and then when it's going to take off. So to answer your question, we will not know till Q1 of calendar year 2024 is when we would know how the economy is going to be in America. Excuse me. Sorry about that. So we would get a better handle on that. But, there is some slowdown. Everybody's seeing it, and we are seeing it. While we are still continuing to get new customers, existing customers, there are some deferment, and some customers which we were given a verbal to execute a signed order. They're taking some more time because of their budgetary reasons. They're waiting for the next year budget, all that.
Thank you, sir.
Thank you, Rajesh.
Thank you. To ask a question, ladies and gentlemen, please press star and 1. Participants, you may press star and 1 on your touchtone phones to ask a question. To ask a question, participants, you may press star and 1 at this time. We have no further questions. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you. And thank you, everyone, for joining. Again, apologies for getting in a little bit late, this earnings call. Hopefully, you did not miss much of that England-India cricket match. Looking forward to talking to you next quarter. Until then, thank you, and good luck to India. So, talk to you, gentlemen and ladies. Bye-bye.
Thank you. On behalf of Kellton Tech Solutions Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.